Refinancing can offer a lot of benefits. One of the benefits, of course, you're looking for a better interest rate than the one you're on at the moment. A lower interest rate means a lower repayment. Another reason is you probably want to consolidate some of your debts that are getting out of control. Like, let's say you'd like to consolidate the credit card balances that you have, or the personal loan or the car loan into your home loan. And so you're just managing one repayment for all these loans. That may be a second reason. Another reason may be you'd like to release the equity or tap into the equity of your home, since the prices of properties have gone up in the last 2 years. And there's equity in there that you'd like to use either to renovate your home and increase its value, or probably you want to release those equity to invest either in shares or in properties. So refinancing can provide you all these benefits. But there are a few refinancing traps to avoid. Number one, don't be fooled by the interest rate. Yes, of course, you'd like to get a better rate. You'd like to get a lower interest rate. Finding a lower interest rate doesn't necessarily mean you've scored yourself a better deal. In fact, a product with more features may cost you a bit more in fees or interest, but could save you more in the long term. Including features such as an offset account will prove valuable, as it will allow you to make larger repayments or put any extra cash against the loan. Products without this feature may charge a fee for early repayments. Number two, honeymoon rates are just that. So you sometimes see these rates that are, they're called introductory rates or honeymoon rates by most banks. Don't be fooled by this, because honeymoon rates may be expensive for you in the long term. Why is this so? While a loan with a discounted interest rate seems a tempting offer, it's only temporary. Once the introductory period is over, the interest will revert to a higher standard variable for the rest of the loan term. It may be more beneficial financially to negotiate a lower interest rate without an introductory discount. It sometimes happens that, the rate may be low, but for you to be able to get this rate, there's a high application fee, or there are other fees in there that you may have to pay to get this lower rate. And of course, there's also the high rate that you will get once the introductory offer ends. So after 2 years, the interest rate you get is higher than if you actually started with something more competitive from the beginning. So speak to your broker and find out and try to understand what that introductory rate that you're getting, what the benefits are, and what the pros and cons are. Number three, be conscious of the fees. There's also a lot of fees and costs involved to refinance to another bank. You have to consider the discharge fee, and this ranges between $250 to $350 per account. So if you have 2 loan accounts against one security with your existing bank, that's $250 to $350 per account. So for you to refinance to the new lender, if you have 2 accounts, it may cost you $700 or $500 to $700 to refinance to another bank. You also have to consider that the new bank will also charge you a fee. It depends. Like, let's say if you're getting the package loan, then of course you don't pay an application fee with most of the major lenders. But if you're not doing a package loan with the next lender, then of course you'll have to pay an application fee for that. And the application fee may be substantial as well. You also have to consider fees like registration fee, transfer fee. These are government fees which you will have to pay when you move to another bank. So it may be expensive for you to switch to another bank. Thankfully, right now, there are different cashbacks offered by many of the banks, especially the major banks and a few of the second-tier lenders. So the cashback ranges from $2,000 minimum, $4,000 for other banks, and then as much as $6,000. The amount of cashback will depend on the LVR and the loan amount. So if a larger loan amount of more than $1 million may attract a $6,000 cashback. If the LVR is below 60% and the loan amount is higher, then that may provide you with a bigger cashback when you move to the new bank. For you to understand or find out what the cashbacks are and the interest rates of other banks, it's best for you to discuss your home loan, or it's best for you to get a home loan review with your mortgage broker. And that's what we do with our existing clients. Or if you're a new client who wants to find out whether you can get a better rate and of course a cashback with the other banks that we have in our panel, speak to us. My name is Maria Papa. We do home loan reviews for existing clients, for new clients. You can give me a call at 0430144008, or you can email me at mpapa@maverickfinance.com.au.